This episode of Back to the Roots podcast is brought to you by Byron Seeds. The folks at Byron Seeds believe organic requires a different perspective, plan, and approach. Organic isn't simply a different type of product or even a different way of farming. It's a different way of thinking, planning, commitment. It's a different philosophy on how to feed the world. Many won't understand, but the people at Byron Seeds do. We're owned by organic dairy farmers. We not only have the product, but we plan, manage, and execute organic. We speak your language, we share your struggles, and we laud your successes. Organic isn't a way of doing business, it's a community. We learn from each other. We're in this together. We'd be glad to talk cropping plans, management systems, the road to profitability. We understand what you're trying to do. We're farmers just like you. Visit us at byronseeds.net or give us a call at 800-801-3596. And thanks to Byron Seeds. This episode is also brought to you by Mercaris. Mercaris produces the most comprehensive, trusted market analysis for organic and non-GMO agriculture. Do you have farm gate prices? If so, Mercaris invites you to join our farmer network, contribute your prices, and get access to the best information to run your farming operations. Get started by visiting us at mercaris.com/farm_gate_survey. And thank you to Mercaris.
Hi, this is Ryan Koory, the Vice President of Economics with Mercaris, here with your monthly market update for U.S. Organics. Taking a look at U.S. organic markets here in October, so far things look pretty quiet as we're moving through harvest. Taking a quick look at prices, we're not really seeing a whole lot of real interesting movement. Looking at the 2-week period in October 2, the Mercaris Market Price Survey recorded organic feed-grade corn delivered to the U.S. Organic Corn Belt averaged about $9.90 per bushel, which is up about 18 cents per bushel from the start of last month. And looking at organic feed-grade soybeans, we're seeing a little bit of gain there, with the 2-week period ending October 2, averaging $32.55 per bushel delivered across the U.S. Corn Belt, which is up about 55 cents from the start of September. One kind of interesting note around the prices we're seeing for organic soybeans is, they're moving just a little bit higher. But what's really kind of interesting is we're seeing a lot of the volatility that we saw, the spread between the high and the low contracts that we saw over the summer is actually starting to tighten up. If we look at the range of contracts prices that we were seeing back over June and July, we were seeing contracts come in as high as $38 per bushel, and we were still seeing some contracts come in somewhere around $28 per bushel. If we look at the market since harvest has started, really looking at the beginning of September, that range around contracts has really tightened up. By and large, we're not really seeing any contracts lower than about 31 and any higher than 35, which is kind of interesting. That overall average price is up just a little bit, but not a whole bunch from that period. It's really that volatility that's tightening out. And, that kind of maybe indicates that wide range that we're seeing earlier this year, a little bit of that was based on speculation of where the market was going and concerns over how tight supplies were going to be. Now that we're seeing that margin kind of tighten up around that $32 per bushel range, that might be an indicator that this market's leveling off a little bit and starting to digest some of that uncertainty. And we might see these prices remain a little bit more stable and a little bit tighter range as we move through harvest. Taking a quick look at imports, moving beyond prices, again, not a whole lot of real interesting stuff happened over the month of September. Generally speaking, we saw organic imports lower year over year again. Taking a look at organic soybeans, they were down about 86% year over year, down about 6,000 metric tons. Soybean meal imports were lower again also, down about 36% year over year to about 32,000 metric tons. Organic whole and cracked corn imports, they were up just a little bit, but it's not a real big indicator that we're going to have a real big resurgence on organic corn imports. They reached about 16,000 metric tons over September, and again, we're talking about a market where volumes have been so low recently that it's not hard to see some kind of gain over the prior year. And, kind of sticking with the idea of corn, as we're sitting here in October, there's, we've talked a whole bunch about what's been going on in the organic soybean markets, and they've been really risky, and there's been a lot of important news. And even here in October, we're waiting, I think on October 27th, the Department of Commerce is going to release its second decision regarding the potential import tariffs against organic soybean meal from India. And we'll have that to be able to talk about next month. But maybe taking a little bit of a step back from talking about organic soybeans for the moment and giving a little space to organic corn. If we look at what we've seen over the past year and maybe what we might see over this next year, there might be some pretty exciting stuff in store by the time we get to this point next year. If we look back at 2021, what we really saw was organic corn imports. They got trimmed pretty substantially. We ended the 2021 marketing year with organic corn imports at about 11.5 million bushels, which is down about 30% year over year. And a part of that reduction was due to the fact that we started this past marketing year in a really long position. If we think back, we were seeing organic corn prices around $6.50 per bushel about this time last year. But another big part of why we've seen imports fall off so hard is the fact that we actually had a really good harvest last year. Over the 2019 or 2020 harvest, rather, we harvested about 4.5 million bushels more than the prior year. Right now, if we look at where the organic corn harvest is going, we're looking at organic corn production in the U.S. that could end this harvest at about 49 to 50 million bushels, which is up about another 4 million bushels from what we harvested last year. So if we think about what those extra 4 million bushels might mean for organic corn imports over the marketing year to come, that likely means we're going to see further downward pressure on organic corn imports. And if we think about demand, particularly feed demand, then this is where we might see things get kind of interesting this next year, particularly given what's going on in the organic soy markets. If we see these really high organic soybean and soybean meal prices hold on through this next year, then it's really likely that that's going to start to show up as slower organic livestock production expansion, which means slower organic feed demand growth overall. And that slower organic feed demand growth includes organic corn. And while we're not there yet, and we're not really seeing prices take any kind of a hit, if we think about the trajectory that we're seeing organic corn production this year and potentially where imports are going, and the possibility of slower demand growth by this time next year, on the back of these higher soybean meal prices, then we might be talking about a market where organic corn prices actually have room to start to weaken pretty substantially. And we might start to see organic corn stocks build by the time we get to next year's harvest. And, with those factors, by the time we get to the 2022 harvest, we might have the potential for an organic corn market in the U.S. that starts to look a little bit like what we saw over 2019.
Speaking of a wild ride, you said we've done it already in the soybean market, and looking ahead and seeing a potential for another wild ride in the corn market that I'm sure to farmers doesn't sound like anything intriguing. But it does open up a bunch of possibilities for what direction this could go. Like you said, imports down. Does that speed up I know we've talked in the past on these episodes that we could, in 4, 5, 6 years be looking at a potential for where do we export organic corn? Does it speed up that conversation, or does it mean that farmers start transitioning over to soybean if that market stays high, or are alternatives starting to be looked at in the organic market for a protein source? There's a lot of factors that can change there, but there's a lot of potential for change with that softening organic corn market potentially happening. It's one of those ripple effects from the high soybean prices that glad we're starting to talk about.
Yeah, absolutely. And it's one of those interesting things that when you're working in an organic market, it just reminds you of how different it can be than conventional, right? If you think about the way corn and soybean prices relate to each other in the conventional market, higher soybean prices generally mean higher corn, right? Because you pull some acres out of corn, you put them into soybeans, which means you have less corn, which supports corn prices. So you tend to have a pretty high positive correlation. But that's just not the reality that we get to have within the organic market. We have crop rotations we have to worry about, and we have import markets, which have a big impact too that we have to worry about. So they just operate differently. And so, it's interesting that if we think about one of the potential implications of a high soybean market in the United States is, lower corn prices. It's kind of almost a backwards sentiment, right? But if you lay all the cards on the table and you kind of walk through the logic, it kind of makes sense. And if we think again, you kind of mentioned, we talked about before, the possibility of corn exports. At this point last year, it's something that I had started the conversation around, thinking that we might be within about 5 years of that being the reality. It is true. We just continue to import less and less organic corn because we're becoming increasingly domestically self-sufficient. With this higher soybean price and the fact that if you're talking about organic soybean prices that are stuck at $30 or more, that's going to come in and have an impact on just how quickly organic livestock continues to grow. It's hard to imagine why it wouldn't. And if that's the case, then you're putting a brake on one of those aspects that keeps organic corn demand up. And with that, like I said, we imported about 11.5 million bushels this past year. Organic corn production is on pace to grow by about 4 million bushels this year. It's one of those things that you're maybe 2 years or 3 years away from this pace of growth coming in and really getting rid of that import picture altogether. And at that point, you've got to start thinking about different realities. Do we have export markets? Can we find other avenues of demand domestically? Do we have enough storage capacity to be carrying corn like this throughout the year? There's all kinds of things that come in. You start to think about from a farm management perspective. Okay, well, let's get real pessimistic here. What if we're looking at corn prices that sit somewhere around $5.50 to $6 per bushel for a year or two? It's not hard to imagine us getting there, because if we look back where we were at this point last year, where we had a long organic corn market, we're looking at corn prices that are at $6.60. And one of the ways that we got ourselves out of that hole is we cut back on imports. If that's no longer there as a mechanism, then, how do you shed that bearish pressure, and what does that bearish pressure do to price? And, how do you start to plan on managing crop rotation and farm profitability under that kind of paradigm? It's completely upside down from what we've done for the past 5 to 10 years, right? Where corn made the money on the organic farm and soybeans were just kind of part of the rotation. Depending on how this whole situation shakes out and how this organic corn production in the U.S. continues to expand, it just kind of creates a very different context than what we've looked at over the past several years. And it's a change that could be coming relatively soon.
Well, and the other thing there, with prices that low and projecting out the conventional market obviously is extremely difficult, but with conventional pricing being high currently, you could also play out a scenario where you have organic growers that decide to just pull the pin and switch back to conventional. But the key word I wanted to focus on in your last comment there is rotation. This also opens up the door for good managers to diversify their rotation, which is, the principle behind organic, rather than relying on corn as their cash producer. There might be some other opportunities out there to look at, and that's why I appreciate this conversation being had now ahead of this all happening. And obviously, we're just making some educated guesses, some swags, I suppose you could say, on what could happen. But certainly for farm managers looking ahead and planning, that rotation is going to be key.
Yeah, absolutely. And, that's really why I think it was valuable to have this conversation at this point. It's not necessarily to scare everybody into thinking that corn is going to be stuck at $5.50. It's really to give people maybe a glimpse of the factors that very realistically could lead to a much weaker corn market within the next couple of years, and to kind of give them a little bit of leeway, a little bit of a head start to start thinking about, okay, if this is something, let me run a pencil through my notebook here at my ledger. All right, if I have 550 corn, how do I want to plan for that? Strategically, what would that look like from a farm management perspective?
That's why we do this, Ryan, right? To not only give an update, but also to give a little bit of a look ahead so that farmers can plan and at least start making some predictions for what could happen and how it could impact their farms and make good decisions on what they can do next. So I think that is where we'll leave it today because, this is all yet to play out, and it's certainly something we'll be keeping an eye on. As you mentioned earlier, soybeans have been, the star, whether we like it or not, of the market here this year. But now we need to flip it on its head and start thinking a little bit outside the box. So it's something that we'll continue to watch and continue to talk about in future episodes. And Ryan, appreciate the time, and we'll talk to everybody next month.
Thanks, Brian.
Hi, it's Rob Wallbridge here from SureSource Commodities in Ontario, Canada. And we'll give a little bit of a harvest report and market update. Right now we're in the midst of soybean harvest here in the east. Weather's the biggest challenge. We keep getting rain every few days, and so that's really slowed down harvest. The crop is ready to come off, but the fields just aren't in good condition. So yields so far looking excellent. I know last month we were talking about the expectation of high yields, and that's definitely what we're seeing. I'm getting yield reports anywhere from 40 to 60 or even above 60 bushels per acre for organic soybeans, which is well above average. Lots of reports in that 50 bushel per acre range. So producers are really happy with that. And corn crop is still looking really good. Haven't seen a lot of that come off yet, so we're going to have to wait and see on the corn. I guess on the marketing side, despite those bumper soybean crops, we're continuing to see prices escalate. And again, that's primarily because of the supply issues coming out of India and increasing restrictions. And we're not really seeing an end in sight for that. The worry now is that those high prices are going to end up increasing prices on grocery store shelves, and we may actually see a market contraction in the organic sector if consumers get to the point where they're not willing to pay the high prices that are resulting from these shortages.
Now, last month, I know we were talking that it was starting to look hot and heavy with harvest, and things were drying out real fast, and it was earlier than usual. But now the rains have hit and actually starting to delay harvest. Are you seeing any impacts of, whether it's getting the next crop in the ground or getting a cover crop in the ground, any impacts to farmers that are coming from actually what was initially an early and now potentially a late harvest?
Yeah, in our area, it's definitely delaying wheat planting. So I'm talking with growers that, they've got some soybeans off, and so they're going ahead and putting wheat in those acres, but then, they're expecting to, or they were planning on being able to plant more wheat, and now it's getting, close to the end of the ideal planting window, or even past the end of that window in some areas. And so there's concern about whether we're going to get the wheat acres in the ground that we were expecting.
Now, I know with there being a drought in the west and in the plain states that some of the quality and the quantity volume of wheat that was coming off the fields earlier this year was impacted. Are we seeing this carry over, and will this potential delay of the crop or this next year's crop getting in the ground have any impacts to the market and farmers?
Yeah, it's going to be interesting to see how that plays out over the next few months. Like you said, there was a shortage on the hard red wheat crop, and food grade milling wheat was definitely short because of the drought. Whereas in the soft red market, the issue here was because of the early drought, but we had low falling numbers and low protein at harvest, and so a lot of that soft red that would normally go into the milling market is hitting the feed market, and so we're actually seeing some farmers are having difficulty marketing some of that lower quality feed grade soft red. So whether if there's a big decrease in the acreage planted, whether that'll give a little bit of support to prices, as end users start to worry about having adequate supplies, going into the end of next year. It's probably too early to say right now what's going to happen there, but it'll definitely be something to keep an eye on.
Now, one thing I wanted to jump in there and ask is for a little primer on the different types of wheat. You just mentioned, hard red, hard white, soft white. Could you just give a little bit of how those different varieties of wheat are used and where they're used?
Sure. So there's two primary distinctions, between soft and hard, and then you've also got winter or fall wheat versus spring wheat. The hard red, most of the supply is hard red spring, and that is grown primarily for the milling market, and so that goes into your bread flour, all-purpose flour, and the ideal there is to have high protein levels, for good gluten structure, and so that's growers are aiming to supply adequate nitrogen to those crops and get those high protein levels. Whereas in the soft wheat market, you've got soft red is by far the most popular variety grown, and then there's also some soft white grown. Those are primarily pastry flours. They go into, if they make food grade, they go into that market, but protein is less important for the soft red and soft white varieties. And again, those are winter wheats, so they're planted this time of year. There is a small amount of hard red winter wheat that's grown as well, but the hard red market is primarily spring wheat.
Awesome. Thanks for that. And the other thing that I know that we wanted to talk about here that's a potential impact to farmers is a fertilizer supply concern. I know there's some concern in the conventional world that we're starting to hear about, but what are you hearing on the potential ripple effects of that falling into the organic world as well?
Yeah, well, I'm definitely starting to, and I've been getting calls for the last month or so from organic farmers that are worried about fertilizer supplies because they're hearing those rumors from the conventional side, and it's more than rumors at this point. We're definitely seeing run up in prices for conventional fertilizer, especially nitrogen, and that's due to supply chain issues and also due to reduced supplies. China has decided that they're restricting exports of fertilizer, so that's having a ripple effect. So part of it is just kind of this general sense of unease about fertilizer supply in general, but there's also some concern as well after the experience that we had last spring, where there was a huge demand and then there were shortages in supply of things like pelletized hen manure or compost. So, growers are concerned about making sure that they can secure supplies of that for next spring. And then, one of these ripple effects, I've actually started to get calls from conventional growers, looking at pricing out compost and other products like that, because as conventional fertilizer prices run up, it actually starts to make some of these traditionally organic alternatives look more attractive.
Well, that makes a lot of sense, and is also, somewhat encouraging that, maybe get away from a synthetic nitrogen source and move to an organic source. But in the meantime, farmers will pay the price, quite literally.
That's right. Yeah. I mean, it is. I mean, yeah. Certainly, from the broader perspective, it's encouraging to see more farmers start to look at some of these carbon-based soil amendments, because they obviously have a lot of soil health benefits beyond just the nutrient content. So that's a good news story. But like you say, it's going to create some pressure. As organic crop prices are high right now as well, and corn prices, we're not seeing the same kind of escalation that we're seeing for soy, but corn prices are definitely stronger than they were a year ago, and they seem to have pretty firm foundation under them. So that also makes investing in inputs more attractive for organic growers.
Sure, and it's always good for the farmer to make those investments, and I like the way you put that, an investment in the soil by putting inputs on. But certainly something we'll continue to keep an eye on, and really appreciate the field report and harvest report. Lots of good information there, Rob, and we'll talk with you next month, and thanks a lot for joining.
All right, thank you.